This is Nightly Business Report with Tyler Matheson and Susie Gehring.
What happens next? Stocks snapped back today, but will investors continue to shake off last week's sell-off, or was the steep slide a taste of what's yet to come?
Magic number. Investors bid up shares of Disney one day ahead of its earnings, betting the company's results will blow past expectations.
Collision course. How dangerous are our roads? A first in a three-part investigative series looking at highway safety and the long-haul trucking industry. All that and more tonight on Nightly Business Report for Monday, August 4th. And good evening, everybody. I'm Sue Herrera, in tonight for Susie Gehring.
Welcome, everybody. I'm Tyler Matheson. It was a quiet August day on Wall Street. For today, at least, last week's seismic jitters about the Middle East, Central Europe, U.S. central bank policy took a backseat to news from, among other places, Portugal. That country's government threw a lifeline to one of its biggest lenders, and that was enough to spark a rebound from last week's steep losses, the worst in more than 2 years for the S&P 500. An unwinding of short positions, basically bets the market will fall, also helped a little bit today. And at the end of the day, the Dow was higher by nearly 76 points, the Nasdaq was up 31, and the S&P added 13. With stocks seeing a healthy bounce back, at least for today, a lot of people are asking what's driving the markets right now and what's the mood of traders. Bob Bazzani has a look.
Stocks rallied, ending just off the highs for the day. It was the best day in 2 weeks for the S&P 500. The rally began in Europe, where the Portuguese government bailed out its largest bank, though bond and stockholders also took a big hit. Now, stocks started weak in the U.S., but the absence of bad news from Europe and Ukraine helped lift the appetite for cyclical names like tech, retail, and commodity stocks, all of which took a drubbing last week. And energy stocks also rose as oil moved up for the first time in 4 days. For the rest of the week, traders are going to keep a sharp eye on Europe. So is the worst over? It may be too early to tell.
There will be lingering concern about the economic condition in Europe. German market took a bit of a hit again today, worrying about them struggling under the sanctions. And we're going to wait to see if this honeymoon with the Spiritu Sancto, the Portuguese bank, lasts. They had a bounce back there, but it wasn't anywhere near the kind of sell-off they had in previous days.
Stocks also got a lift from the realization that earnings have been better than expected. With 3/4 of the S&P 500 reporting, earnings are approaching a 10% gain from the same period a year ago. That's the best showing in about 3 years, and revenues are up about 5%. For Nightly Business Report, I'm Bob Bazzani at the New York Stock Exchange.
Another important issue for investors is inflation, whether it's happening and by how much. For the first time in a while, some corporations, but not all, are saying that they have the ability to raise prices. Sarah Eisen looks at which companies are seeing pricing power and why it's happening now.
Expect to pay more for candy and chocolate. Hershey's and Mars are lifting prices 7 to 8% to deal with higher cocoa costs. That goes for coffee as well. Starbucks, J.M. Smucker, and Kraft, which makes Maxwell House, are all boosting prices for packaged coffee and even some beverages. Kraft also told investors it's raising prices on cheese and its Oscar Mayer meats because of elevated costs for commodities like dairy.
As the economy improves, as the labor market improves, it's become increasingly clear that individual companies from across the spectrum are finding the environment a little more amenable to price increases. It's certainly not anything that's going to set alarm bells off, but it's certainly something that we haven't seen in the last several quarters.
And it's not just at the grocery store. You may also have noticed a slight increase in the cost of burritos at Chipotle, which boosted menu prices by an average 6.5% in April, the first increase in 3 years. Nike and PepsiCo, which makes Frito-Lay snacks, both talked about raising prices on new rollouts like sneakers or new chip flavors. For the most part, those higher prices are feeding into fatter profits. Pulte Group, the home builder, and Reynolds American, the tobacco giant behind Camel cigarettes, both mentioned higher prices as key positives behind bottom line beats this quarter.
I'm not sure that the economy is strong enough that companies are going to find it endlessly profitable and endlessly favorable to continue raising prices. But again, in the short term, you have to look at these modest increases as somewhat of a positive.
Chipotle and Netflix say their price increases during the quarter aren't yet having an impact on consumer spending. But for food and other grocery items, it may be a different story because consumers at the middle and low income level are still facing challenges in this recovery. So companies are going to have to walk a fine line between pricing and attracting sales. For Nightly Business Report, I'm Sarah Eisen.
Well, even though stocks rallied today, there's still plenty of debate between the bulls and the bears on Wall Street. Tonight, we're going to hear from both sides. Peter Boockvar, chief market analyst with the Lindsay Group. In this scene, he's going to play the bear, and our bull is Chris Gaffney. He is a senior market strategist at Everbank, and for purposes of tonight's discussion, he's going to be on the bull side. You know, Chris, let me start with you. Sarah Eisen just talked about whiffs of inflation in the pipeline. Companies, individual companies that have been able to push through some price increases. Are you worried about inflation?
No, we're not worried about inflation yet, and I don't think the market is worried about inflation either. If you look at the 10-year rate, the key is there's no wage inflation here. The labor market, as Chairman Yellen said recently, there's still slack in the labor market, and there's no wage inflation. We do see some price inflation in select items, but again, that does not worry me at this point.
But Peter, you are worried, not necessarily or specifically perhaps about inflation, but you're worried about the Fed and perhaps that last week's volatility is a taste of what's to come.
Yes, I'm not worried about high inflation. I'm worried about higher inflation that brings the Fed into the equation. The consumer price index is already at 2%. The PCE, which is their preferred rate, is up 0.2 4 months in a row, month over month. That's an annualized rate of obviously north of 2%. So the Fed has a problem on their hands because rates at 0 is wholly inappropriate with even that level of inflation. So we can say, yes, it's only 2%, it's not a big deal, but it doesn't correlate well with 0 interest rates. And that's the major headwind, I think, for stocks because the Fed is falling well behind the reality of the data.
You know, Chris, Peter, among the other things he's worried about, not that Peter's a worry wart. He really isn't. I promise you he's not. I know him. Is the in his view likelihood that QE, quantitative easing, and the monetary stimulus that the Fed has clearly signaled it's going to wind down, is in the short term going to be a negative disruption for stocks? How worried are you about that process?
Well, let's face it, the bond buying is going to end in October. However, as Bob pointed out at the beginning of the show, earnings for this earnings season are very good, and in fact, the GDP number rebounded dramatically. Consumers are very confident. So again, I think the environment for companies and for really the equity market is very good right now, and will continue to be good through the end of the year and into 2015.
Peter, take the other side of that, because I know that you really feel as though the Fed does have some tools in its toolbox to address inflation, but that's not all that concerns you in this market. Right.
Well, let's look at 2013. GDP growth was 2%, earnings growth was 5%, and the market was up 30% because the Fed printed $1 trillion. So to ignore the influence of the Fed, regardless of the economic environment and earnings environment, is a mistake. After QE1 and QE2 ended, the S&P fell about 15 to 20%. It feels great when QE is on, but there's a flip side to what the Fed is doing. We've pulled forward a lot of returns, and we're going to have payback when the Fed reverses policy, which they've already begun with QE. In my opinion, QE is a form of tightening. And then we have potential shrinking of the balance sheet.
Pulling away QE,
pulling away QE, right. But the gains we've seen over the past few years has pulled forward a lot of future returns relative to the underlying growth rate in the economy and earnings. So yeah, earnings can be okay this year, but we've well more than priced that in.
What about that? Some of the gains that we otherwise would have had from the real economy, Chris, have been brought forward and are therefore vulnerable.
Well, the Fed has definitely supported the equity markets with these low rates. And again, the QE will end in October. The bond buying portion will end in October. However, the Fed is not going to raise rates. They've said they're going to keep interest rates very accommodative well into 2015, as long as we don't see any big spike in price inflation or wage inflation. And with the slack in the labor market, I don't think we're going to see that.
So, Peter, when you look at the equity markets, are the equity markets slightly undervalued, fairly valued, or overvalued?
Well, I consider them overvalued based on the things I look at. on a PE multiple, you can say, okay, they're reasonably valued 16, 17 times earnings, but that's with profit margins that are 75% above their mean. So putting a normal PE on peak profit margins, I don't think is the right thing to do. On normalized earnings, the market's very expensive. Market cap to GDP, 2000 was the only time you've seen a more expensive market. Price to sales, 2000 was the only time you've seen a more expensive market. So metrics that I look at outside of the conventional PE on forward earnings multiple tells me that the market is very expensive. Therefore, there's no margin of safety for a reduction of Fed accommodation.
All right, last word goes to Peter. Thanks, guys. Appreciate it very much. Chris Gaffney, appreciate your being here as well.
Thank you.
Earnings after the bell from insurance giant American International Group. AIG easily topped Wall Street's estimates, making $1.25 per share, excluding certain items. That's a 20-cent per share beat, with profits rising more than 12%. Revenue also topped forecasts, getting a big boost from the sale of its airline leasing unit, AerCap Holdings. AIG also announced a new $2 billion share buyback plan. Shares initially rose in trading after hours.
One of the biggest drivers in the Dow today and this year has been Disney. Shares up 2% on the session, trading near their all-time highs, just one day ahead of the company's latest quarterly earnings report. Julia Borston takes a look at what investors should expect.
Marvel's Guardians of the Galaxy soared past expectations this weekend, grossing $94 million in the U.S., setting a new August record. And investors are optimistic Marvel's parent company, Disney, won't just beat at the box office, but also with its earnings, due out Tuesday afternoon. Last year's mega hit Frozen is expected to help this past quarter's results. It's the biggest animated movie ever, and it should boost both the studio division and consumer products, as Frozen dolls and toys fly off the shelves. Analysts expect Disney revenue to gain 5% and earnings per share to move 13% higher, benefiting from consumers spending more at the theme parks and ESPN getting a big boost from the FIFA World Cup.
They're really just cable channel companies. No matter, we associate them with their studios or other products. Disney is ESPN, as goes ESPN, goes Disney.
Disney's Media Networks division, which includes ESPN as well as the Disney Channel, is the company's largest. Expected to face a tough advertising market, but to benefit from growth overseas, as well as fees from cable and satellite TV providers. Beyond Disney's own results, CEO Bob Iger is sure to face questions about what the crush of media M&A means for his company, with Fox trying to buy rival Time Warner and two big distribution deals pending, Comcast and Time Warner Cable, and AT&T and DirecTV.
I don't think they need to buy anything, and I think of everybody, they've got, for this quarter, if you believe in the sizzle in the quarter, the World Cup, Frozen, they're going to sound pretty good.
But all the attention on Time Warner shines a spotlight on the value of all cable assets, including Disney's. Disney shares are trading around an all-time high, outperforming the market up about 30% over the past year. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Still to come, disappearing homeowners. The share of Americans who own a home has fallen to a nearly two-decade low. Why? And what does it mean for the broader economy? More troubles for PIMCO's Total Return Fund. The world's biggest bond fund saw net outflows of $830 million in July, the 15th straight month of money moving out. But don't worry, let's put this in perspective. PIMCO's Total Return Fund still had $223 billion in assets under management at the end of the month.
Good news for anyone looking for a loan these days. The Federal Reserve says banks have been easing up on lending standards for a variety of business and consumer loans, including mortgages, leading to a surge in loan demand in the second quarter of the year.
Home ownership fell again over the last 3 months and is now at its lowest level in 19 years and widely expected to go even lower. So what's behind the drop, or perhaps more to the point, who is behind it? Diana Olick has that story.
Millennials. They're just not buying homes the way previous generations did at their age.
Currently, I'm not exactly sure how long I'll stay in the city, but also I need to save up money to at least have, a deposit.
The average age of a first-time home buyer, which was 31 a decade ago, is now expected to jump to over 34, according to Zillow. It might seem like a small jump, but that would keep home ownership lower, keep rents higher, and could impact sales of home goods, because the time horizon for owning and renovating would be shorter.
There's been sort of a great delay for younger home buyers that they're doing a lot of things later in life, buying a home later, getting married later, having children later, and a lot of that's due to higher debt burdens, higher unemployment, and lower wage growth.
And higher home prices. Each $1,000 increase in the cost of a newly built median-priced home forces 206,000 potential buyers out of the market. That's according to a new survey by the builders.
The cost of living has gone up substantially, and I think buying a house will pose a obstacle for many people in my generation.
Mortgage rates may be low, but Bankrate.com reports closing costs rose 6% over the past year. Blame compliance with new mortgage regulations for the hike. And then there is student debt. Loan Depot, an independent lender, looked at loan applications for potential homebuyers between 2010 and 2014, specifically those with student debt. With all other factors equal, the difference between those approved for a mortgage and those denied was a monthly student loan payment of less than $300.
At my age, I don't think it's possible without sort of going through it with someone backing you and helping you.
Of course, in previous generations, parents often helped their kids buy that first home. But today, still smarting from the Great Recession, a lot of parents don't have the ability to do that. Instead, they're opening their homes to their children once again, hoping that free rent will slowly help fund that first down payment. For Nightly Business Report, I'm Diana Olick in Washington.
Shares of Michael Kors slipped despite a dazzling quarter, and that is where we begin tonight's market focus. The high-end retailer posted results that easily topped estimates, with same-store sales climbing 24%. But investors worry that the company won't be able to avoid the discounting that's weighing on the rest of the retail industry. Also, the company's outlook for profit and sales for the current quarter was below estimates, and it said it expects margins to shrink as it expands in Europe. Shares off almost 6% to close at $77 and a penny. Cardinal Health's declining revenue overshadowed its earnings beat. The drug wholesaler said the expiration of its contract with Walgreens was what weighed on its earnings report. The company noted that it did post strong results despite a year of big transitions for the overall industry. Still, shares down nearly 3% to finish at $70.28. ITT Educational Services fell to their lowest level in nearly 14 years after the for-profit college operator said a deal to sell some of its properties fell through. A potential buyer, College Portfolio, dropped out after ITT refused to extend a due diligence period. The stock plunged 46% to $7.72. Ocwen Financial also fell on news. New York's top financial regulator is investigating whether the company is overcharging struggling homeowners for insurance. Shares there fell 2.5% to $26.98.
General Electric says it will invest $2 billion in Africa by 2018. The conglomerate says the continent is the most promising growth region globally. It projects its projects will include supplying gas turbines and rail investments. The shares were off just a fraction at $25.27. Amgen saw its shares rise after the company said its blood cancer drug met its goal in a late-stage trial. The FDA granted the drug accelerated approval status in 2012 for use in multiple myeloma, the second most common form of blood cancer. The stock was up 2.5% to $128.65. Two companies working hard on experimental Ebola treatments. Techmira Pharmaceuticals opened strongly on hopes that its trial of its treatment for the virus will be renewed by the FDA. But later, shares fell on reports that another drug maker could be first to see its drug used to treat the outbreak in Africa. BioCryst also has a treatment in the works, and it has some support from the National Institutes of Health. Shares of Techmira fell 7% to $13.26. BioCryst saw its shares rise about 5.5% to $13.22. It's worth mentioning that both of these are small cap stocks. Tenet Healthcare posted a narrower than expected loss late today. The hospital operator also raised its full-year outlook, saying patient admissions grew at near record levels. Shares were volatile, though, in after-hours trading. During the regular session, the stock was nearly 2% higher at $53.30.
P.F. Chang's China Bistro is the latest company to admit that data may have been stolen from credit and debit card customers at 33 of its U.S. Asian-themed restaurants. The cyber thieves not only stole card numbers, but in some cases, they also got the cardholder's name and card expiration date.
Meantime, McDonald's, which has over 2,000 restaurants in China, says sales in that country are getting hit by last month's food safety scare, which forced it to halt sales of certain items. In a regulatory filing, the world's largest burger chain said the affected markets account for about 10% of its total revenue. But by the end of the month, most McDonald's outlets in China are expected to offer the full menu options again.
Coming up, safety on the roads. Why is the number of fatal accidents involving long-haul trucks on the rise? And what's being done about it? The first of our three-part investigative series, Collision Course, is next.
If you're someone who enjoys the cell phone free zone during an airline flight, this one's for you. As reported by the Wall Street Journal, the U.S. government is getting closer to making a decision on whether or not to allow or ban making or receiving phone calls on airplanes. A formal ruling from the Department of Transportation is not expected until early next year. And while the DOT takes comments from airlines, phone companies, and of course, travelers.
More potential problems for General Motors, this time at the automaker's financing unit. GM Finance has been subpoenaed by the Justice Department over subprime auto loans it made to borrowers with questionable credit histories.
U.S. safety regulators are close to issuing a recall for 1/3 Honda Accords. That's after officials received about 300 complaints from owners of 2008 four-door models that the airbags can deploy when the car doors are slammed closed with too much force.
And finally tonight, the first in a three-part series on the safety of the nation's roads after an alarming rise in the number of highway traffic deaths. And an increasing number of U.S. drivers appear to be on a collision course with long-haul, big rig trucks. Eamon Javers has more.
A horrendous collision.
Terrible accident that left actor Tracy Morgan in critical condition.
New details are emerging tonight in the investigation into that fiery bus crash.
Tragedies like the Tracy Morgan and FedEx crashes grab the nation's attention, but they're anything but isolated incidents.
Very large explosion.
Happening nearly 11 times a day across the United States and causing nearly 4,000 fatalities, according to the National Highway Traffic Safety Administration. There are any number of causes, from driver error to fatigue and serious mechanical problems. In fact, federal regulators say 20% of trucks inspected on the road in 2013 had problems like faulty brakes or bad tires and shouldn't be on the road at all. That's over 2 million vehicles. And more than 170,000 drivers had enough violations to be pulled from behind the wheel.
It's an 80,000-pound missile, and when it hits somebody, it's catastrophic.
Dan Ramsdale is the founder of the Association of Plaintiff Interstate Trucking Lawyers of America.
Roughly 4,000 a year are killed in crashes with big trucks. It's the equivalent of a commuter jet that's got about 80 people on that plane. Having one of those jets crash and everybody on board dies every Friday of every week of every year.
Ann Farrow is the outgoing head of the Federal Motor Carrier Safety Administration, which is tasked with regulating interstate trucking. The trucking industry says it collected over $600 billion for carrying 9.7 billion tons of freight in 2013. Fatal truck crashes have gone up 18% from 2009 to 2012. But why are the fatal accidents going up instead of down?
We see it as a combination of economic growth, the health of our economy, intensified traffic on our roadways.
Any other industry that had 4,000 people killed, you'd see regulators shutting the entire industry down. Why isn't that happening in trucking?
the changes of safety oversight, of regulation, of industry practices themselves has resulted in a decline of truck crashes from about 5,000 a decade ago to 4,000 a day. But you're absolutely right. The increase from about 2009 to the present has continued to tick forward and tick upwards.
Just who is to blame for the growing number of truck crashes is the subject of a fierce and ongoing debate between the trucking lobby and advocacy groups. Dave Asecki is the top lobbyist for the American Trucking Associations.
According to all the data that we've seen, 70% of those crashes are initiated by, unfortunately, someone other than the truck driver, the car driver, the SUV driver. So we're responsible for about 30% of those crashes.
What are people doing wrong when they're out on the roads driving with trucks?
Motorists who aggressively pass trucks, who cut in front of trucks, who tailgate trucks, and who linger on the sides of trucks.
John Lannon is the executive director of the Truck Safety Coalition, an advocacy group for victims' families and truck crash survivors. He thinks it's the big rigs that are more often to blame.
Unfortunately, there's a cultural aspect that this industry has a too high of a tolerance level for deaths and injuries, and we need to work on it.
For Nightly Business Report, I'm Eamon Javers.
Our Collision Course series continues tomorrow with a look at what's being done to ensure better safety on U.S. roads. And to read more about Eamon's investigation into the trucking industry, head to our website, nbr.com.
Some pretty sobering statistics.
Very sobering, that rise from 2009. Maybe more truckers driving a little more fatigued as the business
absolutely.
picks up.
There's a lot of pressure. All right, on that note, that will do it for Nightly Business Report for this evening. I'm Sue Herrera in for Susie. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll hope to see you right back here tomorrow night. I'm Tyler Matheson with a Nightly Business Report news brief. Last week's massive market sell-off, fueled by jitters about the Middle East, Central Europe, and Federal Reserve policy, took a back seat today as investors bought up stocks, getting a big boost after Portugal bailed out one of its biggest lenders. At the close, the Dow was up nearly 76 points, the Nasdaq higher by 31, the S&P added 13. Bailed out insurance giant AIG posted a big jump in profit last quarter after selling its airplane leasing unit. Home ownership now at a 19-year low, mostly because so-called millennials can't afford to buy a house. P.F. Chang China Bistro, the latest company to admit data may have been stolen from credit and debit card customers at 33 of its U.S. restaurants. And tune in to Nightly Business Report here on your public television station.